Steve Crawford from Experience Wealth, and today I'm going to try in less than 5 minutes to give you a really quick update on what's been going on in the banking and lending market. You've probably read some stuff in the last couple of weeks. You'd all know that one of our wealth foundations is managing your debt, and it's probably one of the most important ones, definitely if you've got a home loan or any sort of loans at all. Because of that, we wanted to let you know what's been happening over the last couple of months, and in particular what's happening right at the moment. So Aussie housing prices continue to rise, even though people have been saying that it's a little bit out of control. You can see from 2013 onwards, it's just continued to go up and up and up and up. And that sort of growth wasn't going to be able to be sustained over the long term without some changes happening. The APRA, so the Australian Prudential Regulatory Authority or Regulation Authority, was hoping that rates would level out a little bit and that might slow things down, because in April last year they sort of flagged to the market that they were worried about it. Unfortunately, you can see that rates just continue to drop, and even though they're at 5.5% in December, some of them are now sitting at below 4.5%. That's basically forced APRA to come into the market and start to say that they were going to fix things and make some changes. So they did this back in December. They said to all the ADIs, so approved deposit taking institutions, aka the banks, they're going to be monitoring three things, and if they didn't see changes in those, then they'd be stepping in. So remember, this was back in December. High risk lending, so where there was a high loan to income ratio, where lenders were giving loans to people that was 4, 5 or 6 times their income. High LVRs, so greater than 85, 90% of the loan being borrowed, where it's interest only to owner occupiers, which is a strategy that we use, but most people don't use it the way we do, where we encourage our clients to pay the principal off themselves rather than doing it the way the bank does it. Most people just do it where they just don't pay any principal at all. Strong growth in loans to property investors. This has probably been one of the biggest ones, because the investors, cashed up investors with cheap rates, have been fueling the market, and that's been pushing a lot of first time buyers out, and the government didn't want that happening. And then the last one was around the affordability test. So if banks weren't being as stringent on how much people could actually afford to borrow, we've always used 7.5% as the test figure. The APRA's come out and said they wanted that to be at least 7%. Well, things didn't change, and so last week APRA's come in, and to the 4 big ADIs, so ANZ, CBA, Westpac and NAB, as well as Macquarie, they've asked them to increase their risk weights to at least 25%. Now basically what that means is the risk weight is what sort of adjustment have they got to handle things, how much spread are they making on each loan to allow for things going a little bit pear-shaped, or if the values of the assets drop or the cost of the money goes up. Because the larger banks can have larger volumes, they don't need to make as big of a margin, as you can see some of the smaller banks do. But they've said, look guys, we need you to move that up. By moving it up from around 16% now up to 25%, it had to happen from a couple of different ways. The banks could use their own money from their savings book to adjust for that, or they've done what we thought they would do, which is they put everybody else's rates up. So we've seen in the last couple of weeks, NAB's gone up by, I think, 0.29%, ANZ and CBA's gone up by 0.27%. Westpac hasn't come out yet, but they will. But some of the smaller lenders have moved as well. AMP's increased their rates by 0.45%. And some other things have started to happen as well, which APRA flagged was one of the issues, so talking about deposits. ING are only lending on first home loaners 80% now. Also, AMP have come out this month, and for this month alone, they're not doing any more investment lending. So this is the beginning. It's probably going to go for about another 18 months before it fully plays out. Basically, everyone's going to be impacted, but you'll be impacted in different ways. So how do we help? We go back to basics. We teach you and we reinforce the value of what a good loan looks like, and it goes beyond the rate. Things that enable you to hit your short-term and your long-term goals. That give you features that allow you to reduce how much money you actually pay in interest, which the rate's one of those drivers, but offset accounts and multiple offset accounts also has an impact on that. And then understand how to use it using different bank accounts to hit your spending and savings targets. The beauty of where we're positioned now with Sarah coming on board is instead of just having to refer you through to one lender, we can now refer you through to about 4 or 5 that we've chosen as really good operators that have the structure that we like to help our clients and a great relationship model. We can do this at no extra cost to you. So if through our conversations you choose that moving lender is best for you, and we'll show you all the different options, both within your current lender and potential lenders, we can do that at no cost. Why? Because the lender will pay us a commission. We are really upfront about that. But that commission will cover our costs in the extra work that we have to do to move you over. So from here, you've got your August progress meetings coming up. Let's sit down and look at all your options with your current lender, and we've already started that for the majority of you in terms of looking at what the options are within the current lender where we know you will be impacted over the next few weeks. We'll then explore the options with potential lenders if that's what you want us to do. Again, this is up to you. It's not something that we're going to force on you. As things continue to change, and they will, we'll provide you with updates of what's going on in the market so that you're always across how any changes are going to impact on you. Most importantly, keep calm and call us for help. If you're worried about anything, how you're going to be impacted, even if any of your family and friends are impacted by this, and we know they will be, we're always here for a chat. Chris, Sarah, myself can handle any of your lending conversations, so just pick the phone up and give us a buzz. But obviously we'll talk about it in your August progress meeting. As per usual, this is a general conversation only and general advice only. I'm not giving you any specific advice. If you want to know the specifics, please pick the phone up and give us a call. I've gone over my 5 minutes, but I've kept it under 8. Thanks guys, have a great week, and we'll talk to you soon.